Maverick traders. Welcome out to your currency recap for March 17th. Corey here with you. We're going to take a look at meaningful news. We're going to break down different segments of the market, talk about what's happening in gold and crypto in currency land, and then highlight some trade ideas.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was one of those days where the shift in momentum and trend really picked up some pace. So equities bounced back. We know that stocks had been on a sharp downward trend. They really started to reverse on Friday and then some follow through today. How does that correlate to FX markets? Well, the big downward movers today were defensives. They were US dollar, Japanese yen, and then the big up movers are things like the Aussie and the Kiwi. So this is a reversal from what we had been seeing. It kind of suggests, at least the FX market, saying, hey, all is clear, we're going to go back to risk-on environment and so on. And I would say, well, not so fast. But for short term, I agree. In the short term, that's the momentum trade. On the longer term, I'm not so sure that's to be trusted. Economic Council Director warns there's further uncertainty with tariffs, gold at new all-time highs. These are not things that really augur for significant upside in equities. Japanese yen was down 1%. That's a big move. Dollar down over 0.5%. Aussie up about just over 0.5%, and Kiwi up. Big move, up 1%. So we saw some real volatility, and this is a risk on. So I would look at it this way. This is my take. If you're going to trade for the next couple of days, well, trust the momentum. Go long these, go short these. That's where the charts are going to take us as well. However, if you're looking out into your crystal ball and saying, is this really going to sustain for the foreseeable future? Is it going to be a big ramp to the upside? Again, I wouldn't really trust it. I think that the markets and equities have gone into a true downward trend. I think this is all part of the zig and zag. We had such a violent sell-off. There's going to be a nice bounce, and that's what we're in. But that bounce is going to be short-lived and more downside to follow. So I would anticipate that yen and US dollar will sell off, but then go back up. And Aussie and Kiwi are currently in a rally, but are likely to roll back over. That is the path of least resistance. Crypto bounced back a little with a 2% up day, but in crypto land, that's not much. When we're talking about a big move like 1% in currencies, that would be like a 7-8% in crypto. And it was just sort of a ho-hum quieter day. Litecoin, Ethereum, both up a little bit more substantially, but again, not that big of moves in the crypto market. So we're getting a bounce, but look at this picture. We're below a declining 20. We're below a declining 50. Those have crossed over into bearish territory. We had sold off for the better part of about 20 days in a row. So, of course, there's going to be a bounce, but it's likely a bear rally short setup in equities. As we look at the calendar, we've got the Fed meeting on Wednesday. Usually, generally speaking, it's kind of a quiet Tuesday and into the Fed. Now, even before we hit the Fed, notice the Bank of Japan late Tuesday night into Wednesday morning. We've also got the Swiss National Bank on Thursday. We've got the Bank of England on Thursday as well. So it is the week of reports and policy changes and interest rate changes and so many. I mean, that's 4 central banks, 4 major banks, all coming out with decisions this week. Now, in Japan and the US, expectations are rates stay unchanged. As we look at the Swiss National Bank, an expectation for a rate cut. Bank of England expected to stay unchanged. So is there going to be a lot of volatility? We shall see, but certainly it's set up for some price moves. Now, as we look at currencies, this is how we've got it stacked. Crypto is in no way, shape, or form trending sharply. There's no velocity in crypto. CAD, Euro, Pound, Swiss franc, they're all sort of in this no man's land, no volatility. Aussie and Kiwi with the strong burst to the upside, US dollar and Japanese yen with the strong short setup. So you want to short these two, you want to go long these two as your currency trades in the very short term. Again, I don't really trust it big picture, but in the short term, we want to trade that momentum. Look at Kiwi. Looks fantastic on this 4-hour chart. Upward trend, upward slopes, buy signals, upward trending. And that is picture perfect. Kiwi is the single strongest currency short term in terms of velocity. The weakest is the Japanese yen. Broke out of a sideways base, and boy, that looks like it's got more room to run. Japanese yen looks like a fantastic short, sell signals, downward slope, all the classic characteristics. US dollar, you could already be short this. This is downward sloping, downward trending, all of the classic telltale signs that US dollar wants to trade lower. And I wanted to show crypto just to show the lack of anything. Sideways price action, sideways momentum in the moving averages, sideways and bunched around 50 on the RSIs. There is nothing to do with crypto. Anybody's guess where this goes. Could it break out and have some momentum? Sure. But right now, it is not actionable at this point in time. So we've got the Fed meeting on Wednesday. There is a short-term reversal happening, but it's highly questionable whether that can sustain over the longer term. Continue to trade where there's velocity. That's Aussie Kiwi long and US dollar Japanese yen short. Have a great week, everyone. We'll see you next time.